Hi, my name is Beth Silva, and I'm a realtor in Portland, Oregon with Coldwell Banker Brothers Lucille Properties. This morning I was listening to NPR, the show's Here and Now, and they were talking about title insurance and all the issues that can arise from properties that are improperly foreclosed. So I just wanted to clarify what title insurance is and what the issues could be in the future. So title insurance protects the mortgage holder from a property being improperly purchased. So say you have a large family and all the children inherit a property equally, but one of them does not sign off on a sale. That would be an illegal sale, basically. And that party that didn't sign off on the sale could come back and sue and have the house basically taken back from the new purchaser. So that's more of a traditional way of having title insurance need to be paid out. So what's happening now is all these houses are being foreclosed upon, and the banks haven't been doing all of their research to make sure that they actually have the right to own the property and there's nobody else who needs to sign off on it. And they're going ahead and selling these houses, and people are getting great deals on them, which is good. But if an owner comes back in the future and can sue and says that they didn't have the house shouldn't have been taken away from them, and the court finds in their favor, then the buyer will lose out on this house. And this could be happening for basically generations of homeowners. In 10 or 15 years, a home could have 4 or 5 owners, and maybe you won't realize that the house was originally foreclosed on. Now, this is just being tested in the courts right now, with homeowners going back and suing the mortgage companies. So we don't really know what the final procedure is going to be, how this is going to look in the next few years, but we do know that traditional title insurance only covers the mortgage holder. So say you get a loan from Wells Fargo keeps the loan, it turns out somebody, paperwork was missed along the way, they didn't have the right to have the loan on that. They get their money back from the title insurance that signed off on this. But you as the buyer don't get your down payment back, you don't get any of your payments you've been making along the last couple of years, you don't get any of that money back. But you can get a personal mortgage insurance policy, and so we're really starting to recommend that to all of our clients. It costs more, but in this day and age, especially if you're buying a foreclosed property, it can really be worth the investment. So if you have any more questions, please check out my blog at bethsilva.wordpress.com. Thanks.